Today, we're driving into an investment analysis of a company called Smarten Power Systems. Now, the source material we're looking at makes some pretty big claims that this could be a massive growth opportunity. So let's see if the numbers actually back that up.
And yeah, they get straight to the point with a very bold claim. Smarten Power Systems could be what they call a 3 to 5 bagger. That means its stock price could multiply by 3, 4, or even 5 times. That's a huge potential return, so you know we have to unpack this argument.
So first things first, is this company really a potential multibagger? Let's get right into the core investment thesis and see what it's all about. Okay, for some context, Smarten has a market cap of around 185 crore rupees. Right off the bat, that tells you this is a small cap stock. And that's a really important detail, because while small caps can have explosive growth, they definitely come with a higher dose of risk. The analysis we're digging into uses a late September price of 97 rupees as its starting point. So just keep that number in mind, because all the potential returns we're about to talk about are based on that baseline. And here we go, this is really the heart of the whole argument. Smarten's price-to-earnings ratio, or PE, is sitting around 14.5. Now look at its competition, its industry peers. They're trading at an average PE somewhere between 30 and 70. That is a massive gap. It suggests Smarten is trading at a huge discount. The whole thesis is that if the company delivers, the market could re-rate the stock, closing that gap and sending the price way, way higher.
Now, a cheap valuation is a great start, but it's not enough on its own. You absolutely need growth to unlock that hidden value. So what are the actual catalysts that could fuel this company's expansion?
Well, the first big one is the company's own game plan. And let me tell you, management has laid out a very clear and super aggressive growth roadmap. They are not messing around or being shy about their ambitions here.
And they're not just talking a big game, they're putting a number on it. A revenue target of 350 crore rupees by fiscal year 27. Now consider, that's up from 201 crore in 25. This isn't just some vague hope, it's a specific target the market can actually hold them accountable for.
So how in the world are they going to hit that target? Well, they're investing their IPO money into two huge projects. First, they're expanding their Jhajjar plant to double their inverter capacity, and second, they're starting their own lead-acid battery manufacturing unit. See, this isn't just about making more stuff. It's a really smart move to get more efficient, rely less on outside suppliers, and hopefully boost their profit margins.
And this right here really captures the whole story, the core tension of this investment. The bull case is super compelling. It's cheap, it has clear growth plans and strong guidance from the top. But the bear case points to some very real hurdles. Negative cash flow, the risks that they can't pull off these big projects, and just the general wild ride that comes with any small cap stock.
And that brings us right to the other side of the coin, the risks. You know, no analysis is worth its salt without a hard look at the downside. So let's really examine these potential hurdles.
The analysis points to 3 big red flags you have to watch. First, negative operating cash flow. In fiscal year 25, the company was burning through more cash than it was bringing in. That has to change. Second, execution risk. I mean, what if there are delays with the new plant? That could seriously slam the brakes on their growth. And finally, you got to remember, as a small cap, this stock's price can swing wildly on any little piece of news.
Okay, so you've got the good, you've got the bad, this clear balance of high potential and high risk. So how does the analysis suggest an investor should even approach this? Let's take a look at the proposed game plan.
So the source proposes something called tranche buying, which basically means don't go all in at once. The idea is to dip your toes in, maybe start with 30% of whatever you plan to invest. Then, if the price drops, you add another 30%. The final 40% is for the long haul. And here's the most critical part. The strategy includes a stop loss to manage your risk. It's a calculated, measured approach, not a wild bet.
So how does a stock like this even fit into your bigger portfolio? Well, the analysis recommends allocating only about 5 to 10%. The point is, this isn't a bet the farm kind of stock. It's meant to be a small, maybe speculative part of a much larger, diversified strategy. It's that classic way to chase high growth while still managing your overall risk.
But look, buying is just the start. The work is definitely not done. If you're following this analysis, you have to monitor the company's performance like a hawk. So, what are the key things you need to be watching in the coming quarters?
Okay, here's your checklist. First, revenue growth. Are they actually hitting that 20–30% target they promised? Next, profit margins. You need to see if those big expansion projects are actually making them more efficient.
Critically, that operating cash flow absolutely has to turn positive. That's a huge sign of financial health. And finally, a key signal to watch for is institutional buying. If the big money, the big funds start getting in, that shows the wider market is really starting to believe in the story.
You know, this quote from the source analysis just nails it. It really boils everything we've just talked about down to two things: execution, can they actually build what they promised, and improving their cash flow. If they can deliver on both of those, the analysis concludes that's the path to a 3 to 5 times return in the next few years.
And that leaves us with the final million-dollar question, doesn't it? It's a classic investment story where incredible potential meets some very serious risk. The plan is there, the valuation argument is clear, but everything comes down to performance. So will strong execution be the key that finally unlocks all that upside? Well, that's what the market is waiting to find out.